Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the Chinese economy, and specifically to talk about the fact that the subsidy programs that the Chinese government has been implementing for multiple years now look to be failing because the results that we're seeing coming out of China show a continued contraction in the growth of the economy. And this is a major problem for China. Now, if we talk about the subsidies, you may have heard me mentioning Chinese subsidies and people all around the world complaining that the government is subsidizing Chinese industries. But I just wanted to run through some brief details as to what that actually looks like. And then we'll talk about why this is now backfiring for the Chinese economy. So the Chinese government subsidizes companies in China in a number of different ways. Directly, it can give them government grants. So it can just give a payment of 100 million, $1 billion to a particular industry, which then basically funds all of their research and development, might fund some of their stocking, might actually enable them to hire lots of people. So it gives that company a competitive advantage against a commercial entity that might have to raise that money from investors and then pay a return on that. When you're getting direct grants from the government, you've basically got a kickstart, which gives you a head start in the world of industry. In addition to that, the Chinese government also gives lots of different Chinese businesses tax relief and tax holidays. Because if you think about a company, if you're Apple, for example, and you're making a huge amount of profit, unfortunately, you then have to pay a big chunk of that in corporate tax. So you don't convert all of your profit into cash. There's a reduction, and so you can't actually just keep growing at the same rate that you wanted to because some of the money is being siphoned away in tax. That isn't happening in China. Lots of companies are given tax holidays or basically said you don't have to pay any tax. And so that means that they can roll over all of the cash that they're making into new research and development, hiring people, growing at a faster rate, or even just cutting their prices. Because if you're not having to pay 20 or 30 or 40% tax, then you can actually sell your products a little bit lower because you're still converting a lot of it into cash. They also give lots of loans that are backed by state-owned banks at very cheap rates. So this again is putting money into these Chinese businesses and basically enabling them to grow at a much faster rate because they're borrowing money at a very low cost. And again, if you compare that to a commercial entity, which might have to borrow to basically fund a new factory or expansion or something like that, there is a cost associated with that debt, and obviously then that reduces your cash flow because you have to pay back the interest and you'll have to pay back the repayments at some point. The Chinese government also provides land free to some companies and enables them to get cheap electricity, gas and water. So that again is subsidizing the costs of that business to enable them to produce things at a lower rate. If you're a government-backed company, then you'll be protected from bankruptcy. And we're seeing that right at the moment because lots of the big property companies that have a government ownership are not going into liquidation. They're basically continuing to trade because essentially the banks are told you're not allowed to put this company out of business because the government owns it. And then in addition to all of these company initiatives, the Chinese authorities have also issued lots of consumer subsidies. So there are certain industries whereby you're encouraged to trade up your equipment. So consumer electronics is a good example. You get a really good trade-in scheme. So if you take your phone and you trade it in, you'll be given a massive discount on the new phone, which is funded by the government. And that again is just designed to boost spending, to boost the economy and make things look like they're going better than they actually are if this was just a commercial enterprise. But in today's video, I want to go through the details as to why this subsidy system is now failing and have a look at the latest data that's just come out for China. But before we do that, firstly, can I ask anybody that hasn't subscribed yet to please smash that subscribe button? It doesn't really cost you anything. It's not really a subscription, but it does help me with the algorithm and also puts a smile on my face. And also, I wanted to remind you that I'm currently running a competition to give away my beach house. If you've ever dreamed of living by the sea, being able to get up in the morning and take a short walk to the beach, have a stroll, maybe have a paddle, get some fish and chips and a pint of beer, then I'm going to give you the opportunity to do that because My beach house that I've owned for the last 15 years, I've decided to give it away in a competition. This is close to one of the best beaches in the southwest of England, so it's a really great opportunity, and the tickets are priced at only £5 each. You can see the QR code on the screen now, or have a look in the link below. But if you're not interested in that, if you don't live in England, or you just don't want to live by the beach, mortgage-free, rent-free for the rest of your life, I mean, who wants to do that? Then there is an alternative option of £250,000 in cash, cold hard cash. And obviously I can convert that into any currency in the world. So if you're interested in either my beach house, which by the way has full planning permission to demolish it and replace it with an amazing new build 4-bedroom, 3-bathroom upside down house with balconies overlooking the sea, or if you don't want that, then you just want the cash, then please have a look at the link below or the QR code on the screen now. Buy a ticket. It's another way of supporting me and the channel and keeping everything going. And if you do that, then good luck. This chart shows the year-on-year change in industrial output in China over the past 12 months. And the latest data has been released for November, which shows that industrial output grew by 4.8%, which in isolation, you may think, well, 4.8% is pretty good. But the reason why I show you graphs is to look at the trend. Graphs are fantastic for telling us what's going on over the longer period. So if we have a look here, you can see that back in March, industrial output was growing by almost 8%. So that was a pretty good time from China's point of view. But since then, we have seen a consistent reduction in the growth in industrial output. You can see a clear trend here, a clear downward movement. And the figures for November at 4.8% are the worst at any point in the past 12 months. And we expand the scale of this chart to show the last 3 years. You can see that the November result is actually the worst since August 2024, so 15 months ago. And industrial output is important because China is an industrial nation. It manufactures billions of things every single year and then sells those things both into the Chinese market and also overseas. So the output coming from industry tells us whether China is growing or contracting. And the 4.8% figure is really important because China has once again set itself a growth target of 5% for 2025. So 4.8% in the last 12 months tells us that it's below its growth target. Now, this is just in industrial output. It's not talking about profitability. We'll have a look at that in a moment when we have a look at producer prices. This chart shows the year-on-year movement in China's retail sales, so how much Chinese consumers are spending. And once again here, this shows a significant downward trend. You can see that in May, consumer spending had increased year on year by around 6.5%. However, it's come down in every single month since then. And the latest data for November shows that year on year, retail sales only grew by 1.3%. And that's really important because when we're talking about a year-end target of 5% growth, if your domestic market is only going up by 1.3%, then you need your export markets to be growing significantly more than 5% to offset it. And we'll talk about the exports in a moment. But the figure for November is the worst for the last 12 months. And if we expand the scale of this chart to show the last 3 years, you can see that it's actually the worst result since December 2022, which is almost 3 years ago. And again here, if you look at the trend, it's not looking good from China's perspective. Now, the reason that I wanted to talk about domestic sales is because of what's happening in the market. If we have a look at this chart, it shows inflation in China over the past 12 months. And one thing that's important to note here is the scale on the right-hand side. It goes from 1% at the top to minus 1% at the bottom. So we're talking very low rates of inflation here. Now, the figure for November, interestingly, is the highest that China has seen in the last 12 months. Inflation was 0.7%. Now, that's against the target rate of 2% for China. So it's well below their target. And the problem that China has is that it's struggling with price increases, which as a consumer, you might think, well, that sounds pretty good. If prices aren't going up, then that's good news for me because I can buy more. But the problem that China has is that its whole economy is dependent upon Chinese business, on manufacturing. And those manufacturing businesses need to be able to pass on cost increases. And when inflation is sitting at 0.7%, it's very difficult to do that. And if we have a look at this chart, it shows the movement year on year in producer prices, so factory gate prices, the selling price of a product when it's leaving Chinese factories over the last 12 months. And you can see that in November, factory gate prices fell by 2.2%. So that means that Chinese companies are selling their products today for 2.2% less than they were this time last year, which is pretty disastrous when you consider that your costs are always going up. So you're having to pay more for your electricity and your people, for your wages and your raw materials. When all of those costs are going up, but your sales price is going down, then that means that it's coming out of your profits. And if we expand the scale of this chart to show the last 3 years, you can see that producer prices have fallen in every single month in the last 3 years. And that's a nightmare because then it becomes compounding. So if your price fell by 2% last year and then it falls by another 2% this year and then another 2% next year, so for 3 consecutive years, then essentially your prices have gone down by, let's keep it very simple here, 6%. I know it isn't that because there'd be a compounding element to it, but just in simple terms, it'd be down by 6% over 3 years. And your costs over that same period might be up by 6% if they've gone up by 2% each year. Please don't send me loads of messages saying that's not how it works. I've done the calculation and it's 6.6% or whatever. I know that's how it works, but I'm keeping things simple just to put into perspective the problem that Chinese companies have at the moment selling goods into China. They're having to sell them at a reduced price every single year. And that means that they're making less profit. And I've mentioned this many times before, but over 50% of companies in China are currently banking losses as a result of this. Now, I mentioned earlier in today's video that Chinese government actually subsidizes direct consumers in China. And it does this through a subsidy scheme. So basically, lots of different companies are enabled to offer a trade-in discount. So if you go along with your old phone or your old laptop or your old TV or something that you may think, well, it's got another 3 or 4 years life in it, I don't really need to buy a new one. But actually the government's saying, hey, we'll give you a brand new phone for half price if you give us your old phone, which is a much better deal than you'd get selling on eBay or giving it back to Apple. Then that may encourage you to say, do you know what? It's coming up to my birthday. Maybe I'll treat myself to a new phone. I'll give my old one back and do this. So this has actually been boosting consumer sales in China over the past few years. But unfortunately, from China's point of view, the effect of that is now wearing off. If you have a look at this chart, the red section here shows home appliances and audio-visual equipment. And what we've got here is the year-on-year increase or decrease in sales. They've got a dotted line here on July 24, which was when Beijing offered fiscal support to consumer groups. So basically, it was offering these trade-in discounts. And you can see that in that period, there was a huge increase in spending on home appliances and audio-visual equipment. In October and December, it was actually up by 40% year on year. Now, that was going really well. So at the end of 2024, the Chinese authorities decided to double the amount of the discount that was being offered for those trade-ins. So it made the deal even better. And you can see that the immediate impact of that doubling had a big impact on sales. And in March, they were up by more than 50% year on year. However, since March, we've started to see the impact wearing off. And the reason for this is because you're bringing forward people's purchasing. So if you're encouraging somebody to replace their phone maybe a year earlier than they would have previously, then they might hold on to that new phone for another 2 or 3 years. So you're actually bringing forward sales into 2024 and the first half of 2025 that might have taken place in the second half of 25 or in 2026. And what you tend to get then is a boom and bust. So there is a huge increase in sales as you're offering this amazing offer. But then people say, okay, I've bought my new phone, I've bought my new TV, I've bought my new laptop. I don't need another one now for another 2 or 3 years. And that's what's starting to happen in China. So the impact of this subsidy has really been boosting the figures for the last 12 months. So they've been overstated. They're artificially high because they've been subsidized. But subsidies like this can't last forever. The impact starts to wear off, and that's what's happening with consumers. And also because things are going badly in the Chinese economy, Chinese consumers are starting to become more cautious. So they've seen a huge impact on their wealth In the property market, we've seen falling prices and they're still going down in China. So anybody that's involved in property, that's bought property or speculated in property, is nursing their losses. And that's also having a negative impact on people's spending. So the subsidies that the Chinese government have pumped into the local market, the domestic market, are now starting to wear off. They're not having the same impact as they were initially. And this is a problem because you can't just keep doubling the subsidy. It costs a lot of money to do it. But also, if it's not working, what's the point? Now, I want to talk about exports because what we've just talked about shows us that Chinese companies cannot rely on the domestic market. They've got falling growth in retail sales. They've got problems with regards to passing on price increases, and we've got very little inflation. So the domestic market is looking shot at the moment. So the big hope is exports. And if you've been following the channel, you'll know that I recently talked about the results for November for China's exports, which were up by 5.8% year on year, which is obviously above that 5% target that we've talked about. And this was seen as a good recovery because in October, year on year exports were actually in negative territory. They fell year on year. So at face value, this looks like good news for China. However, the problem that China has is that it is providing a huge amount of subsidies for all of these exports, all of the things we talked about earlier in the video, whereby Chinese companies are given beneficial situations and they're given cash and low taxes and all these other things that make it easier for Chinese companies to sell their products at lower prices. So they're undercutting the market in most countries that they're exporting to. And if we have a look at some examples of what China is providing to Chinese industry, here's some industries that I've picked out. So electric vehicles, they give grants, tax relief, cheap loans and consumer subsidies. And it's estimated that so far, the Chinese government have provided up to $300 billion worth of cash incentives for electric vehicle manufacturers in China. That's one of the reasons why those businesses can sell their electric vehicles for half the price of other countries, because they've had this huge injection of cash and lots of their costs have been waived. Now, interestingly, there has been a huge backlash against this. It's been very high profile. And we've seen the USA, the European Union, Mexico, Brazil, lots of countries introducing tariffs against Chinese electric vehicles to specifically increase the price back to a market level. So basically, those tariffs are offsetting all of these subsidies that are being provided by the Chinese state. But it's not just electric vehicles that China has been doing this in. Batteries, China leads the way in the provision of batteries. It gives the same sort of subsidies, and it's estimated that they provided around $150 billion worth of support to the battery industry. Solar panels, the vast majority of solar panels now globally are produced in China. I think we're up to about 90% plus. So if you've got solar panels, they're probably made in China. And one of the reasons for that is because of this subsidy system. And it's estimated around $100 billion worth of subsidies have been given to solar manufacturers in China. The steel and aluminium industry has had around $100 billion pumped into it per year. So that's every single year that's going in. That's one of the reasons why Donald Trump has hit Chinese imports with such high tariffs. And we're seeing that from other countries now. They're following suit because China is basically putting the worldwide steel industry out of business because it's selling so cheap that it's very attractive if you need to buy lots of steel to buy Chinese steel. But it won't be if you've got a big tariff applied against it. And also the problem you have is if you let China take over the world and everybody goes out of business, then China could then double its prices, treble its prices, because it would be a monopoly. Semiconductors is another area that China is dominant in, and this is sort of mass production of semiconductors, so we're not talking about high-end AI stuff that's coming out of NVIDIA and those sort of companies. China has given over $150 billion to the semiconductor industry. Shipbuilding, which is a smaller global play from China's point of view, but it's given around $50 billion to the shipbuilding industry. Lots of ships are now made in China. And property, we've talked about a lot. There's been a lot of government support. A lot of companies that should have gone bankrupt haven't. And that's estimated to be over $1 trillion worth of subsidies that have been provided by the Chinese state. So when you look at the right-hand side of this chart and add up all of these figures, we are talking a huge amount of investment from the Chinese state to make Chinese businesses able to compete globally and offer very low prices. But clearly, this isn't fair. This isn't the way the rest of the world is operating. Everybody else is just leaving their companies to actually compete on a commercial basis. But the problem that is now being encountered by a lot of these Chinese companies is, firstly, we've got a backlash. So the subsidies, everybody knows these subsidies exist. So lots of countries are now increasing their tariffs. Donald Trump was one of the first to do it. So he's imposed lots of tariffs against most Chinese imports into the USA. So China is suffering. It's seen a huge fall. I recently reported that there was over 50% fall in November in its exports to the USA. So China is now turning to the rest of the world. Its biggest market is now the European Union because it's flooded it with all of that product that's no longer going to the US. The European Union is now investigating everything, and it's likely that it will impose tariffs similar to the USA. So everybody is now closing in on this subsidy system. It can't continue. It won't continue. And China is going to lose lots of volume of sales. And also, as we've talked about, Chinese companies are selling at lower and lower prices. The subsidy isn't enough to break into those markets. Chinese companies having to cut their own factory gate prices as well, which is reducing their profitability. And we've got a lot of companies in China now that are making losses. And this is all building up to be a huge problem from China's perspective. So what's the summary and conclusion today? Well, I wanted to post this video because the latest figures coming out of China for November are very worrying from China's perspective, because they have seen a reduction in industrial output. It's not growing at the same rate as it was historically. This is actually the worst performance since August 24. So that's setting alarm bells ringing in China. Now, industrial production equates to how much China is producing to sell. And there are two basic options for Chinese companies. Either they sell into the domestic market, so they sell to Chinese consumers, or they sell via exports. Now, we talked about the fact that the Chinese market is really slowing down at the moment. Retail sales have grown at their slowest rate for a long time. So this tells us that consumers in China are pulling back from buying things. And the 1.8% growth is nowhere near the 5% that China has set itself as a target for 2025. And the problem, as we discussed, is that the subsidy system that's been set up for Chinese consumers is now run its course. They had this huge boom in sales at the beginning of 2025 and also in 2024 as a result of the fact that Chinese consumers were being offered really good deals to trade things in. But you only really trade things in every now and then. You're not going to do it every single year. You don't need a new iPhone every single year because they last for more than 12 months. So the effect of the subsidy system in the home market has now worn off. And this has cost the Chinese authorities a lot of money. They've basically been boosting the sales through artificial purposes by pumping money into their home market. So if you're a Chinese company, the home market looks like it's bust at the moment. That's not going to save your bacon. So you really need to focus on exports. Now, exports in October actually fell year on year. So that was a disaster from China's point of view in terms of trying to hit that 5% target, because it needs exports to be coming in at maybe 7 or 8 or 9% growth to offset what's happening in the domestic market. Now, I saw in November that exports increased by 5.8%, which still isn't enough to get to 5% overall, but is better. However, the problem that Chinese companies have is that they're constantly having to cut their prices. We saw from the producer prices that they've now fallen for more than 36 months. And that's an absolute nightmare if you're a company, because your costs are always going up. But if your prices are going down, then you're just losing profitability. And over 50% of companies in China are now making losses. So we've got a situation which is already looking bad. But when you look down the road, it looks worse, because China has been notorious for providing subsidies to all of its companies to enable them to sell their products at lower prices. And all of the governments around the world are now waking up to the fact that this is unfair. Donald Trump, I think, has been at the forefront of this. He came out right at the start of his presidency and said, it's not right, it's not going to continue. And so he's hit China with a barrage of tariffs, which has resulted in a massive fall in volume of products that China is now importing into the USA. So that's a major problem from China's point of view, because it was its biggest single market. China has pivoted and started selling all of those goods to lots of other countries, and the European Union being the biggest one. And all of those countries are now saying, well, hang on a minute, if the USA have said this and they've done this, then shouldn't we really be doing the same? Because if we don't, then all of our own companies are going to be put out of business, because China is undercutting everything that they're selling. And so they can't make any profits. They can't make any sales. If we don't do something about this, all of our industry will be out of business and will only be dependent on China, which nobody wants. So we're starting to see tariffs being imposed. We saw it with electric vehicles first. That was the first industry that was targeted. The European Union, for example, did a full investigation and imposed tariffs of up to 40% on imports. So that's had a massive negative impact on China's exports of electric vehicles. And it's likely that we will see lots of other industries following suit. So this represents a serious problem from China's point of view, because if they're going to be hit with higher tariffs by all countries, then they're going to see a reduction in their exports at the same time as Chinese companies need the increase in exports to offset what's happening in the domestic market. So this is an absolute nightmare from Chinese business point of view. But if you take a step back and think about what this looks like from the Chinese government's perspective, they've been pumping trillions of dollars into these subsidies. It's been one of the biggest expenditures from China's point of view. And it's not working anymore. It's not going to sustain the continued growth of the Chinese economy. So China's built up all of this debt. Somebody's got to pay it back. If you've got falling sales and falling profitability, that's going to be very difficult. And this could result in a complete disaster from China's perspective. So I just wanted to make this video really to put you in the picture as to what's happening with the subsidies, what the backlash has been, and why this represents serious trouble for China and the Chinese economy. So thank you very much for watching this video all the way through to the end. Hopefully you found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Please subscribe if you haven't done so already. Don't forget that I'm running my competition to give you my beach house. You have to buy a ticket, £5 each in exchange for that. If you don't want my beach house, then you could take an alternative of £250,000 in cash or whatever the alternative currency is in your country. So if you'd like to do that, have a look at the QR code on the screen now or the link in the description below. Thank you very much for watching this video all the way through to the end. And thank you so much to everyone that's supporting me. So if you bought me a coffee, sent me a YouTube super thanks, or signed up as a patron, YouTube member, or buy me a coffee member, thank you for that support. Really appreciate it. And here's something to put a smile on your face.